I'm Ashton Addison from EventChain for InvestmentPitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Pat LaVecchia, the co-chairman and CEO of Oasis Pro Markets. Pat, welcome to the show, and thanks for taking the time to be here today.
Great. Hi, Ashton. Thank you very much for inviting us, and big fan of the show.
Well, thank you very much. I'm really excited to dive into digital securities today. I know there is a lot going on in the industry and we have a lot to talk about. And I want to hear a little bit more about Oasis Pro Markets as well. And if we could just kick it off for the viewers by starting with an overview of Oasis Pro Markets and how that fits into the industry, then we can dive into the details.
Okay, great. So Oasis Pro Markets is a broker-dealer. So we're regulated by both FINRA and the SEC. We're also approved to run an ATS, which is like an exchange light alternative trading system. But the uniqueness of Oasis Pro Markets is that we allow digital cash for digital securities. So digital securities are nascent right now. I would say the market is basically where crypto was 3-4 years ago, but it will take off. So digital securities, we can do fixed income, we can do equities exempt, which means private securities. We can do OTC, over the counter, public securities. We can do SEC registered mutual funds and interval funds, which allow redemption features. So we can do a broad array of different corporate issuers. And the way we describe it is we're the bridge between traditional finance and DeFi, if you think about us that way. And digital securities are basically a token representation of underlying stock certificates or fixed income certificates. And I can go more into detail on that. But it's very exciting. It's a huge market. Coinbase going public yesterday is a validation of this entire market. I equate it to when Facebook went public and what happened from an internet for the internet and the growth of the internet. That's where we are. We're just on the cusp of tremendous growth.
Definitely. Great intro, Pat. And it is a very exciting time. And I've been following the space as well for many years. And I first heard of digital securities and security tokens back in 2018. And it was supposedly, right around the corner. And that seemed like that was sort of like the 2013-14 for Bitcoin. It was early on. But now in this next phase of what seems of the bull market with the Coinbase listing and all of this other great news that's coming out, it seems like now is sort of the time to shine. And all these traditional financial industries getting involved into DeFi as well. It seems like there's a lot of institutional backing that we can talk about. And I haven't heard as much in the crypto space of alternative trading systems or these broker dealers getting involved in the crypto space. Could you talk about what sets Oasis Pro Markets apart in the ATS market?
Sure. Well, first and foremost, I'll answer two parts to that question. 2018, we're late to the game in a way, meaning Oasis Pro Markets, because others came earlier than us, T0 being the obvious example, right? And they were early. And I think our timing is about right, because over the last year or so, while we were going through the approval process, and we were approved in early December, we didn't make an announcement till the end of January. We were in stealth mode, but two significant SEC comment letters came out during as we were going through the process. One was in September of 2020, which was what's called a 3-step model with custodians. I'm not going to go into detail on that. It's too granular for this, but it was a big movement forward with custodians like Bank of New York, Anchorage, Prime Trust, those groups. Secondarily, in December, another letter came out where they basically were offering a safe harbor to digital banks, so digital security banks, with the opportunity to custody as well. There's a comment period going on with that right now. There's a couple of nuances that need to be taken care of, but that's just huge movement forwards from the regulators. So we were lucky. I'd like to say, it had to do with our team, which a lot of it was, but we were just lucky as we were going through the process that the regulators were really getting up to speed and seeing that this market is coming. In regards to what sets us apart, beyond, the areas that I mentioned to you that we're approved to do, our subscriber base are broker dealers So other broker deals with retail clients will be able to trade on our ATS, like a Robinhood, for example. If we had a relationship with Robinhood, our order book could be on a retail client's mobile phone. That's just one example. Institutions, so everything from a qualified purchaser all the way to what's called a QIB, qualified institutional buyer. And lastly, accredited investors, as defined by the SEC. So that's a broad array. What sets us apart, Ashton, is digital cash. So we define digital cash as stablecoins and as CBDCs. CBDCs are coming. Australia, China are coming along. We will be able to have that transacted on our ATS for digital securities. No one else can do that. So that's a big step forward that the regulators allowed that to happen. So let's talk about DeFi very quickly. So DeFi, Ashton, you own Bitcoin, right? You don't want to sell it, but you're interested in buying into this particular XYZ issuer on the Oasis Pro platform. So what do? You collateralize it through one of the collateralization ecosystems in DeFi. You convert it into stablecoin. You take that stablecoin, you go into our system, and you buy XYZ token. So you're diversifying. And there are a lot of other benefits to being on our ATS because, we'll talk about that in a bit of time, but that's very exciting for issuers, right? So Bitcoin holders, ETH holders, maker hold, whoever you are at the end of the day, collateralize your position, convert it to stablecoin. Now you can trade it in a alternative trading system. It's kind of cool.
Yeah, the collateralization and all the different platforms that are enabling this is just expanding the industry so much, and I think it is very cool. And you mentioned there stablecoins, but as well as CBDCs in Australia, but I'm curious about the United States. From your research, what do you know about what's happening right now with the regulation of digital securities overall, just in the U.S.?
So there are two areas here, right? So we're working very closely with the regulators at the SEC and FINRA. That'll grow into the CFTC, NFA, other regulation entities. But they're laser focused right now on this area. In the last 2 years, the level of education and knowledge at the regulators has grown exponentially. They've brought in industry experts. Look, they're the guardians of our financial system, right? But that being said, the analogy I use is we're a tricycle with training wheels with Ferrari brakes. So the regulators are all over us. So we have to be very, very careful about what we do at the end of the day, but it's moving forward. So that's digital securities. So CBDCs are slightly different. That's the Treasury, and that's at the end of the day, Congress, which, as we all know, is very dysfunctional right now. There's a lot of movement on CBDCs here in the U.S. I've been part of panels in regards to CBDCs. We've done research, white papers, et cetera. But at the end of the day, Ashton, I think the U.S. is at least 1 or 2 years away. China is coming out this year. I think that's definitive. And I believe that the general view of CBDCs, which is democratization, the unbanked, there are so many benefits that many of in the U.S. can take advantage of, but there's also a reserve currency aspect to it. And China, by moving into digital CBDC sooner than the U.S., there is a concern that China can become the reserve currency. The yuan could become the reserve currency of the world. So, we're about to hit 20% debt tied to GDP, the highest it's ever been here in the U.S. since, I think, World War II. That's concerning. But the other side of the coin is, hey, we're the reserve currency of the world. Let's not be too concerned about it. Well, if that changes, it's going to be a big problem for the U.S. So we're pushing hard through our lobbyists, et cetera. But I think it's at least a year or two away. And next year's an election year. So how much are you going to actually see come out of Congress?
Definitely. It's quite an interesting time. And yeah, that reserve currency of the world is obviously going to be important. And that's something that I think the U.S. should be thinking about, as they're building this out. And just overall, institutions looking to preserve capital, as you mentioned, the debt to GDP is really high, money printing is high. How strong of institutional interest do you think, as more digital securities are getting approved and will move into the market, how strong do you think the institutional interest will be in getting into these digital securities markets as quickly as they can?
Great question. So Jamie Dimon the other day came out with a 65-page review of their performance, but he specifically identified fintech as an issue of concern to the major banks in the world, and we're part of that. So the big banks are seeing it. Now, that being said, JP Morgan invested in Consensus and was the lead investor. So they're playing both sides, right? They're starting to see that, and they're moving in that area. The large firms have been very inflexible in regards to moving into this area, but you're sort of seeing it very slowly. They're going to move into digital securities in a big way. Again, I think it's probably 3 to 5 years away, similar to what occurred with Coinbase. Look at Coinbase right now. We and you, I'm sure, and your listeners all felt 3 years ago that crypto was coming, right? It's just a question of not if, but when, and time period. None of the big banks got involved. None of the large financial institutions got involved. Now, let's jump ahead. Look at Coinbase's valuation.
Yeah,
it's equating to a lot of these large financial institutions. We think the same thing is going to happen in digital securities. And the key for us, there are 3 areas. It's education, regulation, implementation. Education this is nothing different than your typical security. That's very important to understand. Regulation, making sure the regulators approve digital securities on the same path as they approve SPACs today, which is very quick. Eventually it'll get there. And then implementation, having some marquee names on the issuer front will bring the institutions in. And we're working hard on that. And the biggest issue with digital securities right now and the platforms that preceded us has been liquidity and volume. We think we are solving that by incorporating DeFi and traditional market makers into the system. When we launch, that's our game plan. We're all about liquidity and volume, and that'll draw the institutions. But those 3 areas, education, regulation, implementation, those are our focuses and what we think will grow the industry.
Definitely, all great points. And I totally understand, these institutions waiting for the big names to get in. And when Coinbase dropped into its listing yesterday, the market cap was higher than almost all the other stock exchanges combined. And it's crazy it's almost like Tesla just coming out of nowhere, coming from a low market cap to all of a sudden you've encapsulated the whole market. And I could definitely see, as digital securities start moving in, I like what you mentioned about, liquidity, because when I was looking at T0 back in 2018, and some of these crypto companies that I want to mention in a short while here that are looking at doing digital security offerings, I'm looking at an exchange that doesn't have a lot of trading pairs. Is liquidity going to be a problem? And how do we get past that initial point where there's only a few digital securities on the exchange to getting the liquidity, getting the volume, and having a lot of trading going on there. So it's interesting how it's going to play out. And I'm curious, Pat, what are you most excited about for the digital security space right now? Whether you've been hearing about the regulation or the institutional interest, what's corroborating the most excitement for you?
Well, it's all of the above. We are having discussions with all the major financial institutions, big banks, major custodians, DTCC, all the major transfer agents. So remember, everything's tied to the 34 Act for digital securities. And what the regulators are doing and what they have been doing is they're focused on 34 Act. How do we fit digital securities into the 34 Act? So you have transfer agents, you have custodians, you have clearance and settlement, right? Now, if you believe in the blockchain, which is immutable, right, why do you need a transfer agent?
Mm-hmm.
Well, that's a good question. Well, but from the regulator's standpoint, their focus is, well, it's got to fit into the 34 Act. So that's what we're working through. But all the major players, to your question, in all those buckets that have been around for 50, 70, 100 years are speaking to us. The institutions, they're all speaking to us. Now, it all started with Bitcoin and ETH primarily, and the other tokens. Now they're starting to see the benefits. So let's talk about GameStop, if I may.
Yeah.
And what occurred there. That can't happen when the evolution to the blockchain occurs, because settlement times will be seconds. We can actually do that right now in our demos and when we launch. So is that really needed today? Yes, it is. It'll be available on our ATS immediately. So that's one aspect. So you sell your stock, you have access to your currency immediately to buy something else or transfer it out, whatever it may be. There's zero counterparty risk. That's very, very important. We have a permission blockchain. So we have KYC. And I know this is against everything from blockchain or anonymity, et cetera. But, as traditional finance is embracing crypto, you do have to go down the KYC AML aspect for taxes, governments, et cetera. It's unfortunate, but that has to happen. But there's zero counterparty risk. You do a trade, there's a match. You have no issue regarding whether the other party will actually deliver. And let me just give you one more example, which I think is really critical for digital securities. So with Bitcoin, we've all heard the stories, Bitcoin and ETH. You lose your 20 words or your ledger hard drive. I'm sorry, I'm just skipping over this, but your ledger cold wallet, you lose it, you lose the 20, you just lost $5 million in Bitcoin and it's gone forever. Now with digital securities, that doesn't happen. So if there's fraud of some type, there's a cap table that's real time that the issuer will have. That particular cap table, if for whatever reason my name or my wallet is tied to it and someone else has stolen it, they won't be able to sell it. And what the issuer can do is burn that particular digital security and then reissue it to me. So there's a level of safety with digital securities that is not in place in typical crypto. And that's very important to the regulators. That was one of their concerns. One other aspect, just to give you a sense of what we saw during the approval process, we must have gotten a question about what is a miner and how does a miner impact a transaction? And you and I will sit there and go, well, that's not a big deal. That's just how the blockchain works. But for the regulators, it was a big deal because their concern was, can a miner stop transactions, have an impact on transactions? So, we answered the question. We kept answering the question. Eventually, they understood how we viewed it. And seeing the regulators move in such a positive way. Now, they're not as quick as anybody would like, but I'd probably put that at the top of the list. In 2 years, we've just seen a tidal wave from our perspective, not only of interest, but also just education at the regulators, which, is a big positive.
Definitely, and a lot of great points there, Pat. And we are short on time, but I do want to ask you some final questions. In terms of the near-term success of digital securities and taking the next step, what do you think will be some of the key factors to the success of digital securities in the next 12 months?
Okay, fantastic question. Implementation, having quality issuers, liquidity, volume on the ATSs. This is a broad ecosystem. There are several players in this particular market, all focused on slightly different areas, but a rising tide lifts all boats. We want to see, honestly, everybody succeed. whether, our ATS, there'll be other ATSs as well. So from our perspective, we need some quality issuers, volume. It'll draw in the institutions. And with that, I think this market will take off. And it'll be faster than what occurred with crypto, because traditional finance understands securities already. We're just moving it over to the digital blockchain world. So, I'm saying 3 to 5 years. I'm sandbagging a little. I think it'll be a lot sooner. I think in the next 12 months, there'll be a couple of hundred issuers across ATSs, and there'll be ample enough volume that the large players will start getting involved.
It's definitely an exciting time. And for the viewers and institutions or anybody else that's interested in just learning more about digital securities, the work that you're following, and about Oasis Pro Markets, what's the best way for them to learn more?
Great. Well, we launch in June, July timeframe. We have a website, oasispromarkets.com. It's going to be updated within the next 2 weeks, but there is a subscriber link. So I would encourage your viewers to subscribe. We will have a lot of information coming out in the next couple of months. We're going to have DeFi investors. We're doing a strategic round right now. We're going to have some DeFi investors, traditional investors, which we're really, really excited about, who believe in our vision and our view and what we've talked about today. So please subscribe. And Ashton, I'd love to come back after we launch and talk about, what we've learned.
Definitely, and I would love that too, Pat. I will leave the link to that in the description box below for the viewers as well. All the best with Oasis Pro Markets leading up to that, and let's follow up in the near future.
Fantastic. Thank you, Ashton.